territory. Well, we have with us Prateek Agarwal now, MD and CEO of Motilal Oswal Management Company, joining us with a quick sense of what's happening in the markets, where's the buying, whether there is the buying, and whether or not the much-awaited recovery is here to stay. Hi, Prateek. Good morning. Thank you very much, Mr. Agarwal, for talking to us this morning. I want to start with what we are currently seeing. I know structurally India is in a good place. We've had concerns. We've had concerns up until a few days ago where growth is slowing. Inflation is not going to be easing off. Earnings were largely disappointing. Foreign flows were turning out to be aggressive outflows. But as we look into the next couple of months of activity and earnings season, where is your bias? Are you a buyer in this market, or do you feel like a better price will come soon?
Okay, a lot of questions in one question, but we think you saw the worst in Q2.
Actually, I also.
Now look at what has been happening. Q1 was the period when you got general elections, and general election has its own dynamics. Obviously the code of conduct comes in, decision making are frozen for some time. Mind you, a lot of pre-election decision-making happened. So Q4 had pretty strong ordering from the government. But Q1 was lackluster. Now, if you move into Q2, you got good rains. When you have good rains, for example, it's cooler, you use less ACs, your bills are lower, electricity guy makes less money, and so on. So the coal guy who does open cast mining is able to do less work. People come to offices later. The productivity falls if the rains are very good. Now, Q3 is when you get the benefit of all of this. If we look at rains, if they've been good, well spread. So Q3 should see benefit of that. Now, government spending, you got just 26% fiscal deficit in the first half. It will get covered in the second half, which again gives you some sight of momentum from the government side. I think if you look at today's newspapers, they cover the fact that government wants to accelerate spending in spaces where it can be accelerated. So what you are going to see in Q3 and Q4 will be significantly better than what you saw in Q2, is what my sense is. Now, don't look at staples for feeling better. That's not the story. The tailwinds are in spaces where government policy push is strong. This is a period when capex is going to lead growth in the economy. So if you look at those spaces, it will be good. Look at luxury consumption, be it houses, ACs, etc., it will be good. But if you are going to look at, to my mind, food companies, staples kind of stuff, then mostly one should expect to be disappointed.
Morning, Neeraj here. So, would you believe that Q3 shows a marked improvement over Q2? Obviously, it will. But in terms of commentary, will we see a normalized Q4? Because all three quarters, Q1, Q2, and Q3, by virtue of the fact that it kind of follows Q2, will not necessarily be normalized. So, will we see a normalized Q4? And will the market take heart from it?
So I would suggest ask every promoter who comes on your business to give you some sense of how the festival season went. Our sense is from people that we have connected with that festive listed and unlisted, The festival season has gone very well. The same thought that this is slow and that is slow, and it is pertaining to staples, food kind of stuff where competition is coming in, and you won't use more of talc, right? You won't use more of soap. You will not use more of toothpaste. So that is where disappointment is, and it shall continue to my mind. But other spaces are seeing growth in an audience. When this question was put to me, I said, don't ask me, tell me if your companies are feeling the slowdown, if there is stuff in the godowns which is not selling, and the feedback is not negative, it is quite
Yeah.
okay.
Prateek, I buy that point because I think this morning only we were speaking to a retail company, an auto company, and the belief is that the numbers are not looking all that bad. So therefore, then is this the 23,500 or 23 to 24,000? I'm not asking you to predict a number, but is that the kind of base that we are forming until the numbers start showing?
No, so okay, we think, and I think we spoke last time also. We think the correction is overdone. Typically, these levels are good levels to buy. We have had 5-6% correction on account of time. So 6 month markets have gone nowhere. So that leads to 5-6% kind of well. Now, there is an old India and there is a new India. Okay, the indices today represent more of old India. So many companies are attempting to embrace the new India, but most of the pure play new India companies are outside of the index. So, as soon as you bifurcate in this manner, you find stuff which is tailwinded continue to do very well and deliver positive surprises, while the index, is a completely different ball game altogether.
Yeah, just a quick question, because we talk about this often, right? And you talk to any asset allocator, they'll tell you how large cap is where the value is and the buy should be in the large cap space. But let's also accept the fact that momentum opportunities are far more in the broader market universe. Where is your bias? Are you allocating more to large caps, or you're getting attracted to the momentum play in the broader market universe where some stocks may offer healthy risk reward?
No, so, okay, let me do it differently so that the message gets across. We have been saying this is time for alpha for a very long time now. Alpha gets created when a new space offering strong growth for a very long time emerges. So, for example, in 90s, this was done by software as a space. It's not there in the index, new space, strong growth for several years, and managers lapped up, made some space for it, and generated alpha versus an overall portfolio which represented what was there then, all old economy. Okay, go forward. By 2000, software is old economy. You got in two new spaces in automobile and telecom. They provided some alpha. Go forward. Same old economy portfolio. You got old economy meaning old portfolios. You got in real estate construction, made some alpha from 6 to 8. 8 to 20, not much new came in the market. But now, if you see last 5 years, you are getting renewables, you are getting new tech, you are getting electronic manufacturing, luxury consumption, capital market plays. No AMC was listed 5 years back, and so on. So now is the first time in history, where you can build a completely diversified portfolio representing only these newer spaces where high growth will sustain for longer, which is where our focus has been. The first time in history, so many new spaces have come, and in fact, I haven't rattled off all these spaces. There are more. So this is what we are doing, and hence we are saying this is time for alpha. It is not an index story; it is new India story.
Prateek, we have to wrap the show, but I would love to know. I know you say we not rattled all the names, but it's a new India story. Top 2 themes, 30 seconds, Prateek. No explanation, but just the top 2 themes that stand out for you. People will do their own research.
No, so look at our portfolios. You will find a lot of what we have said represented in all of our portfolios. So, and our advice is to take the portfolio approach because, one space can undergo ups and downs. It is best to have all in the portfolio. That provides sustained performance.
Noted. Yeah. Well, Prateek, thank you so much. It's good to see optimism on a Friday and especially from a large boss like you. So good to see that. Thanks for taking the time out and have a great weekend.
Thanks.
Right. That's the view from Prateek Agarwal of Motilal Oswal saying this is the time to allocate. It is not a